Okay, folks, here we are. And here's George. Hi, everyone, he said. Hi, George, hope you're well. Let's invite you onto the screen. I'm not going to share my screen for this one. That's what I'm going to do.
Hello, Simon. Can you hear me?
George, I can hear you loud and clear.
Excellent, excellent, excellent.
So first of all, can everybody else hear George? Use the chat box to let us know. George, it's like the new system. Do you have a webcam, or are we just doing audio?
Well, we're just going to do audio, and I rather hope we can share my screen.
Sure. Okay. You need to just hover your mouse above the, well, it looks like a Space Invader, the symbol for your George H profile. If you hover your mouse above that, do you see a small laptop with an arrow?
I do indeed, and as I hover it, it says minimize chat.
Okay. Well, it should say screen share.
I'm looking for something that tells me that. Okay, top right, I've got then this little icon against my name.
Yes.
And that icon, if I click it, just goes to full screen. So I can no longer see the chat.
We don't want to do that. Bottom left, you should see that same icon, and as you hover above it, you get a microphone and one or two symbols. One of them is a small laptop symbol with an arrow, and it should say screen share.
Right, nothing like that showing. I've got a thing that says clip moment down here, bottom left. And let's just see if the chat box can come back.
Odd.
Yeah.
We've been beset. You know, this is not. We've had a day of this actually, George. There's only one or two where it's been
now,
smooth.
Simon, I did email you probably only half an hour ago my PowerPoint presentation. I don't know if you retrieved that.
Didn't come through yet, actually. So let me see if I can download that.
Let's go hunting here.
Yeah, we've got a very patient audience today.
Well, I'm recognizing several of the names, and yeah, great guys.
How are you anyway, George? You well?
Yeah, I'm well. I think I mentioned to you that I couldn't do this morning because I went off for a little procedure, and later morning my eyes were watering. We probably want to leave it at that.
Okay. Those of us that
but
know
all is well now.
I understand where you're coming from. Okay.
This was sent to Simon Around the Clock Trader.
Okay.
It's awful.
Okay, that's odd that there's no screen share option there. It's just.
I agree.
Right. On my left-hand side, what have I got? I've got Crowdcast at the top, joint events, da-de-da-de-da.
Anyway.
Well, here we go now.
Sorry.
George, I've got the slides, so I'll bring them up here.
Yeah, I've just got this clip moment bottom left. I've got Adam Harris YouTube channel link.
No, no, it's none of them. It should be around your profile name, your George H, and then it should give you the option to share screen. But no matter. I've got the slides here, so let me be
Oh,
your
excellent. Good.
your gaffer.
Yeah, I will.
I'll just minimize that. And I will share my screen. Okay.
Yeah, okay.
Oh, that's encouraging.
Great. So it can be as easy as ABCD. It says.
Yeah,
okay.
there has to be. Yeah, that word is really quite important because it is too easy to say that trading is too easy, and it can be. It most definitely can be.
Okay.
The problem is that sometimes we and our personalities get in the way of making money. How about that?
Yeah, I know it's tools, isn't it?
Okay, we've got slides, we've got
Okay.
speaker, and we've got sound.
Good, that's excellent.
I trust everyone can hear and see, and LS says Yahoo, which I'm going to take Yahoo as confirmation that everybody can hear and see. So, George, I'll let you get started.
Right, okay. Now, I will just say that there is somebody talking to me, a lady's voice in the background, every now and again. So anyway, let's carry on, and I'll talk through that, any chatter that there is. Right, okay, folks. Well, look, it's really good to be with you this afternoon. Fortunately, the temperatures are slightly lower where I am, where Simon's used to these sorts of temperatures. But of course, for us Brits, it is a bit of a shock to suddenly have a week of absolutely fantastic weather. Now, the markets have started to perform this week, and I had hoped to go to some live markets, but let's make the assumption that we can't actually do that right now. So let's just, by word of introduction, I've been around in this business for a good many years. I've been trading on and off since the late 70s, and in that time, I've seen an awful lot of things happen, with markets going absolutely crazy, with markets which have been doing exactly the opposite. And rather unfortunately, there's that tendency which I've seen and experienced myself, that when markets are going gangbusters and they're really, really high, then people tend to be incredibly bullish and they buy, only to find that the market then collapses. It collapses, it keeps going down forevermore, and people then start to think that that's all the markets can do. They're going to crash forever, and they sell absolutely everything, only to find that that's about the time that there's going to be a reversal. And that's something that we've got to guard against within our personalities. Simon, if you could do the next slide, please. That's great. So I've got a coaching program with which comprises a number of courses. These are effectively modules of the coaching program, and my aim is very much like the previous speaker, in order to educate and show traders that it can be done. It can be done with quite a degree of personal application, of course, and the starting point is going to be some form of a technique, and we're going to be talking about that today. So the program itself, it's an open-ended one, and I've got members who've been on the program and have been with me well since 2002. And I'm not quite sure if there's one actually in the room today, but it stood the test of time. It stood the test of time. Simon, if you could do next. So this is something that I mentioned from time to time that there should be, you've heard of Alcoholics Anonymous. I think there should be a Traders Anonymous, where we sort of go along and we remain completely anonymous, and we talk about what went wrong. And this is the first question then: have you ever put on a trade that runs into a very acceptable profit, and for whatever reason you eventually take a loss on the blasted thing? Has that ever happened to any of you guys out there? It has most certainly happened to me. And you know, once it happens a few times, then you realize that yeah, an honest response there. Thanks, Henry. That money and trade management is absolutely vitally important. What I'm going to be talking about with the ABC pattern, etc., today is of very, very secondary, very, very exactly. Yeah. If you're in that position, you are not doing it right. You have completely and utterly ignored, even if you ever considered money and trade management. And the key thing is, we got to develop a discipline to follow it. If a person comes along attracted to trading and they've got a bit of a sort of butterfly mentality, and they want to do this, they want to try that, and they're not terribly disciplined, regrettably, they are not going to survive in the trading world for long. There are a good many very clever traders out there who will take your money. They will take your money. So that's the real key to making profits. And of course, all the stuff that we probably used to do in a regular job is totally useless in the world of trading. For instance, if we're in sales, marketing, or whatever, you make more phone calls, you make more calls, you get more customers in front of you, and you make more money. Well, in trading, the harder we look for trades and the more that we trade, the less money we make. It works in exactly the opposite way around. And also, there's quite a bit of personality that comes into it in terms of what really worked in a regular job: climbing up the greasy pole, getting yourself into middle management, upper management, general management, etc., becoming a director. How do you do that? Well, a lot of that is to do with schmoozing. It's with, you know, getting on with the right people and getting yourself noticed. Well, that is totally useless in the trading world, because we're generally trading possibly with a mentor, possibly with somebody else. But it doesn't really matter what that other person thinks. They can't give us that leg up. It has to come from us as the individual trader. So ego is a big killer in the market, because so many people come into trading thinking, oh, I know how to trade. I know which way that market's going to go. And the market goes exactly the opposite way and takes their money. So we got to learn to respect the fact that the market is bigger than we will ever be. And the market is going to move. It's going to move on information that perhaps we're just not aware of. And we've got to accept the fact that it will do that. And it will do that on a very regular basis. And if we have got an overblown ego, we're sticking to our guns and saying, I know that market is going up, and it goes down. We've just got to pull the trigger, and we've got to have the discipline just to cut that trade really rapidly. So ego has got absolutely no place in trading. So look up this guy, both of these guys, Mark Spitznagel and Everett Klipp. Everett Klipp's dead now. Mark Spitznagel, he currently runs a multi-billion-dollar hedge fund. He's done extremely well. He was trained by Everett. Everett had a simple philosophy: fall in love with losing money. And as soon as you lose money, cut that trade instantly. He was a scalper on the Chicago Board of Trade, and scalpers they just take tiny profits. But the principle applies that if you have a loss, you must cut the trade, or you will eventually be wiped out. So that's Everett and Mark. But do look them up. It's well worth reading Mark's story. So there we are. That's his formula. Simon, if you could click it along. So he taught them how to lose, and lose with aplomb. He showed me the importance of discipline in trading. So let's just look at this. This is just a sort of a hypothetical trade. It's the DAX, which is one of the best movers. In fact, on the indices at the moment, the CAC is the one that is doing really rather nicely on most time frames. I say rather nicely in that they give good, clean moves, and we see what is actually going on so much more easily than with some of the other indices. Just now, it's all shifting sands. We may well find that others will be will be coming along. But let's just look at this. So Joe takes a breakout. He's got a breakout trade, and there we are. £15 a point, sets a stop loss, 40 points away. Yeah, that's fine. So he's taken the breakout at that upper red line, and it pops up to a profit, 50 points of profit, 50 bits of profit. Great, absolutely fantastic. He's up 750 quid. Now, as we can see, what goes on here is that the market then comes back. It comes on back down, and if you click it again, Simon, then you can see the white line. He pops out for a coffee, comes back, and oh dear, he's actually, his stop loss has been hit, and he's taken a loss. He's taken a loss. So that's a classic case of that trade was nicely in profit, and then what has happened? He's just taken his eye off the ball for a moment, and he's taken a loss. He's taken a loss. What he could have done, if he'd have had a little bit of sensible money management, what he could have done, he could have closed part of that trade. So here we are. It's running on a 30-minute time frame. He should be watching this like a hawk. It went on up. As soon as it started to falter, as soon as it started to come on back down, and you can see that by the candle at the top there, it's got a long upside tail. It's a shooting star. It's saying that, look, we're not going up any further. It's coming back. And as it was coming back, what he needed to do was to take some profit. Take either all the profit, or, as I recommend, take 2/3 profit. And what he could have done, he could have tucked away 200 quid. And then when it went on down to hit the original stop, well, there we are. He would have lost a couple of hundred on the remaining part of the trade, and he would not have lost anything. He wouldn't have lost anything. So that's one way that that our man Joe could have traded. And what he could have done, and this again is what I recommend, he could have taken that first 200 quid profit. He could have done that. And then if he'd have just moved his stop loss into break even, so brought it back up to his buy level, he could have kept that 200 quid profit and had taken a very acceptable, not quite a scalping trade, but an intraday profit over the space of no more than about an hour and a half. So we don't want to get too carried away with potentially big trades. So anyway, let's just take a look at this one. Bit of active trade management. Then we've got a nice little pattern down here on the left, and it keeps bumping up to the red line. You can see there twice, 3 times it just bumped up to the red line and it came back. And in fact, it gave a little false breakout on the low, but then it came back and it broke through. So there we are. So Joe has been waiting for this. He sees the breakout. He sees the breakout. And what he you've got to be so careful with breakouts. Breakouts are very often false. In fact, if you look at the move below to the bottom of the chart, that was a false breakout. And if one had traded that and it came straight back, you'd have lost money. So how about this for a general rule? Don't trade breakouts, wait for the inevitable correction. And you can see the move that went up. Okay, so it then corrects on back down. So he buys £15 a point then at a level where price has started to move back up again. So we got the breakout, we got the correction, and then we got the meat of this trade. He puts a stop loss underneath his low candle. He's risking 40 points. And the eagle-eyed will see, well, so it runs on up really, really nicely to the top of this chart at 40 points profit. He closes a third of it, okay, of £5 a point. He takes £200 profit. Right, let's see what happens next, Simon. So he then moves the stop on £5 a point to the entry level and leaves the other £5 stop where it was originally. This trade cannot now lose. It cannot lose. And that is the sweet spot that we like to get trades into. When you're in that position, you're totally relaxed. You've got no pressure on you at all. And you can just coolly, calmly, and collectedly just stick around, wait for it to unfold. So before we move on to the next slide, let's just consider then what happened. The next morning, he gets a shooting star, and there we are. We can see it at the top of the market there, and it prompts him to close his £10 per point, and he takes a whacking profit. So 1,500 quid plus 200, £1,700. Now, if we just look at this for a moment, what we've actually got from the low is a zig-zag zig. So up it goes, it corrects, and then on up it goes. That is a classic ABC. A classic ABC. Hi, Kathy. Good to see you here. And that's really what I'm going to be talking about. If you can identify this sort of a move where you get perhaps you get a breakout, you get a correction, you've got the A move, the B move is the correction, the C move is the move we want to be on, and you will see it time and time and time again. Okay, Simon. So let's get a bit of theory here. We've got these ABC patterns. You can call them an AB equals CD. I just like to call them a simple ABC pattern. And as you can see, we've got the one over here on the left, and this is where price previously went up. We've got this move, which is A to B, B to C, and then C to D. If we're going to trade this, there are two places we want to trade it. We want to trade it at C, or at least the start of the C move, the C to D move. That's where we want to trade it. And the other place we might want to trade it, and this depends upon what a higher time frame might be telling us, we might want to trade it from the end of the C move. Okay, that C to D move. We might want to trade it there. So we get various different shapes and sizes. Some of these will be a move which is going to be exactly the same. The A to B move is going to be the same length as the C to D move. We call it a measured move. That's an idealized version. See those from time to time. But of course, we also see some of the extended ones where the C move is much, much longer than the A move. And of course, we get some of those which is exactly the opposite of that, where the C move is only a very, very short move. So we got to look for some of the warning signs as to what it is likely to do next. So, and of course, you know, the bearish version exactly opposite, and that central one, you know, ideally both time and price are equal. Sometimes it works that way, but I'm really only concerned in price, not necessarily time. And of course, these are all parts and parcels of other trends. So here we are. That's where we would be looking to maybe get a trade on once it's completed. And there is Fibonacci in here as well. Don't want to get too hung up on Fibonacci. It's a great tool. I use it all the time on my charts. But let's just try and keep it reasonably simple and straightforward for a moment. We you know, once you get good at identifying these, you'll notice the Fibonacci relationship between the waves. So C to D then, often 100% of the A to B, as just mentioned. And of course, we can get these extensions. And one of the important extensions we look at now and again is, well, we've got the 100%. The 138.2 is not quite so important, but the 161.8 is. So that's one of the common ones we find. And when we get to that level, the chances are we're going to find a reversal. So there we are. We've got a potential major trend reversal area at the end of that C move, that C to D move. Okay, Simon. Fine. So let's just look at this one. This is the dear old euro. So you can trade this on any time frame, If you don't mind the old blood pressure and the and you're quite happy to live a life on the edge, then trade the 5-minute charts or even the 2-minute charts. I've done a fair bit of that, but what I've gravitated to is longer term. I like to trade off the shortest I tend to trade off these days is the 4-hour chart, but more often it's going to be the daily and the weekly chart. So yeah, exactly. That is a good question. And Martina, I think we've met, haven't we, Martina, some while ago? So yes, well said, Anil. Yeah, it's very much an art, but it's only an art once you start to see the techniques, and it really does come down to watching what is going on with price action. There could well be Fibonacci levels that it comes to. It could well be that after a C move, you either see an important high volume shooting star, or perhaps a hammer candle. They are the clues. They're the little tells that we'll get. And if we just look at this one, we've got this this move over here from the left, with price then moving up. It just kept on moving up, and the eagle-eyed will see that that's moving in a series of waves. We then get a series of 5 waves, actually, if we're really looking closely. And then we've got this this move, which is the B move. It's the B to C, and the B to C is just a straightforward zigzag zig. I think we might let it go. And there we are. Look at this. We've got this move running up, and if we could pick this out, if we knew 1 or 2 little bits and pieces that you're gradually picking up right now, and you can see that we're at 50%, a 50% Fibonacci retracement. There has been a good trend. That A move has given us a really good trend, and then we've got the correction. Can we go back, Simon? Yeah. Then we get a 3-wave move coming down to a 50%. And then we just need to look at price action. It moves up, it corrects, and away we go. So there we are. That extended right the way on up to there. It decided it had a little bit more to go, but you'll notice that we get these A, B, C moves time and time again. And quite often they will come back to and follow Fibonacci. Okay, Simon, ready for the other one now? That's great. So this is the euro yen, which has been absolutely fantastic in the last few days. I don't know if anyone's been trading it, but the euro yen and the Australian against the Japanese yen have been fantastic movers. So anyway, effectively what we've got here is picking out some Fibonacci. We've got this move, it runs on up, it corrects, we want to get in, at the start of the C move, and we can do that by something as simple as looking at price action. So on that little B to C section, right bang in the middle of this chart, we've got candles which are going down, they're going down, they're going down. The very first candle that now goes up and moves up above the preceding candle, that's an ideal entry point. Yeah, absolutely right, Anil. That's the ideal entry point. And so, you know, we just got to pull the trigger, take the trade and run it on up. And as we can see on this particular one, that it ran very, very nicely indeed before finally deciding that this entire move was over. Okay, Simon. Yeah. Sorry, I'm sorry. Could I ask you to go back again? Just one. Yeah, that final comment is that these three-wave moves, these zigzag zigs, are great. But very often we will then look at a higher time frame. This is on a 4-hour chart, 240-minute 4-hour chart. And what we can then look at, if we want to look a little further and maybe go further out, we can look at the daily chart and the weekly chart. And we just might find that there's a dominant downtrend in the longer term charts, in which case we want to be selling at that high, at the end of the C move, the end of the C to D move. Fine, thank you, Simon. Right, okay, well, we've got a number of lines here, but this correction sort of went on rather. Haven't got them all marked up, but you can see that if we take the blue line, the left-hand blue line coming down, okay, it comes on down, and we then get a very, very solid correction, and it turns itself into a zigzag zig. So it moves up, it corrects back, forms a higher low. They're all important things to look at. A higher low just above that low, that's a very bullish sign. We then see that price pokes its little head above our main color trend indicator there, and we're away again. So we buy at that point and we'd run it on up, and sure enough, it completes its ABC or ABCD or zigzag zig, call it whatever you will, and it comes almost up to a previous high, and that's the area to look for reversals. And sure enough, that's exactly what happened. It then moved on back down. So that would be the end of the C move. And as price then comes on back down and we see it starting to tumble, we take the short with a stop above. Yeah, yeah. Many of them are tricky. In fact, for every one that you look at, every trade that seems to be very, very clear and straightforward, there are going to be half a dozen which are going to be really messy and tricky. And the chances are we've got to bring our money management techniques in, and if we find ourselves moving into a loss, we just take that loss immediately, don't think twice, and then we just wait. We just wait and look, and we've got to be patient. Impatience is not going to help at all, and frustration is not going to help. We've just got to humbly look at the market and say, okay, well, that one didn't work. There'll be another one that will come along. It might be today, it might be tomorrow. I might have to wait till next week, but I'm prepared just to wait until I see a really nice, clean, tidy setup. Of course, we never know when our profits are going to come. Sometimes, you know, we'll go through a period of months, And yeah, good point on the divergence. Excellent. And we find ourselves going through this process of making sure that we do not lose too much money in a period of time. For whatever reason, the markets will be just maybe moving sideways, and sideways markets are difficult markets, and they're very, very easy markets to lose money in. So our quest is to, when the markets are moving sideways and not giving good signals, is to keep our money. In order, we're probably going to make a bit of a net loss over a period of time, but we need to keep that loss to an absolute minimum, because the signals will come. As they came this week in the markets, the signals will come, and when they do come, we need to have our account intact. We need the money there ready to actually thump into these really, really good trades. It's a shame I can't show you some of those trades on the EURGBP that we've had this week. Absolutely fantastic, absolutely amazing. And well, here we are. This is another nice little classic move. Dollar Swiss, it's the 4-hour chart. Absolutely love the 4-hour chart. We find that it's sort of moved on up, and we then get what is a larger correction of any of the previous ones. I'm always looking for, on the corrective, the move, the B move, the B to C move in the middle of the chart, I want to see at least an ABC within it itself. And there we are. ABC move. It comes down to a corrective level. I haven't got any Fibonacci on there, but it was at a Fibonacci level. And there we are. Away it went. So if we can see an ABC within what might become a bigger ABC, then the chances are that we're going to be able to get in at the right level, and away it goes. So there we are, the 4-hour chart. That's the one. That's the one to use. Now, folks, I had planned that we would go to some live markets. Simon, you haven't got live markets up by any chance, have you?
No, I don't have any other applications open, I'm afraid, George.
Right. Okay. Okay. Fair enough. Fair enough. Okay. 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 Right. Well, I think I'm probably going to have to.
You're still not able to screen share, and you still can't see a symbol when you hover above your icon that offers you to screen share. No.
I'm just looking at it. When I hover it, it tells me that I'm George H. It gives me a user number, followers and following, and that's it. That's it. That's on the chat box. Let's just
it's across the other side, on the left-hand side of the screen. You should see your logo in your George H there.
I have found it. I have found it. So let's just go and bear with me half a mo.
Okay.
Let's right, HD share screen 1. We're in business. Oh, fantastic.
Okay, great. George, we're looking at looking at the chart now.
Okay, fine. I mentioned the EURGBP. This is one which has been moving quite strongly, and this is the weekly chart. This is the weekly chart, and the benefit of weekly charts is that we've got a lot of time to do our analysis, a lot of time, and we can go off and do other things, and that's really what trading is all about. I like to go sailing, as I will be next week again, and I will sort of be able to look at these longer term charts. So if we look at this one in the middle, where we've got a move down and we've got a move up, and then it decided to move down, this was the absolutely key week. So I just put that vertical line on there just to highlight it. Let me just take it off again, because I just want to show that that is a very clear bearish engulfing candle. And when it comes to trigger candles, there's no better trigger candle than that one. It's an engulfing, and it's an absolutely fantastic signal, which allowed us to look at this unfolding. So that's the A move, or the A to B move. That's the corrective move running up to attempt to go to a new high. It failed. It came back, and then it went up again and then engulfed. And that was the first candle, down candle, after those 3 up candles. And as you can see, it ran and it ran and it ran for weeks on end. It just kept running. And this is a great one to short, because if you're trading this with a conventional account, not through spread betting, but if you're trading it as full lots or mini contracts or micro contracts, you actually get paid to sell this one. You get a modest interest rate payment paid into your account. Anyway, it all came to an end with this enormous equal and opposite bullish engulfing candle. So, you know, that told us there's right, party's over. Time to go looking elsewhere. It's time to go looking elsewhere. So there we are. That's a good sort of classic one, which was shown to us very, very clearly. And this is the 4-hour chart. This is what has just happened this week, or at least it was unfolding last week as well, where we had a low. Price went up, it came down, it went up and came down. We got a double correction. And then as price sort of moved on up, it became a buy. Notice the Hallmey, and there we are. It was possible to run this one on up. We ended up with a series of waves, and the waves gave out. Now, this top, which was signaled very, very clearly with this bearish engulfing, one of these absolutely key trigger candles again. Look at that. Beautiful candle. We've got this 5-wave move up. It was showing signs that perhaps it wanted to move. Yeah, got it. Thanks. And then there was only one thing to do: sell it. Sell it like crazy. And we saw today, from this morning, it had a little pause. And this is a little mini ABC. I'm not quite sure if we'll be able to see this clearly. Yeah, we can see this clearly as to what happened this morning. So we got a move down, we got a move up. We've got an A to B move. We've got a B move, that's the B to C. It ran on up. And if we drop down even yet another time frame, we would see clearly that was an ABC move. And then it resumed its move. And all that happened this first thing this morning. So we then had this hammer that showed up on, well, both the 30-minute and the hourly chart, and it seemed to be wise to take partial profits there. And that's exactly what we've done. Back to the 4-hour chart. There may be more to go. It may break through here. It may not. No idea what's going to happen next, but we've taken a profit and moved on. Now, this is one chart that I did want to, I want to show you. We've got the US dollar. And I've not mentioned anything about fundamentals, but it's useful to know what is going on out there, which is moving currencies. With the EURGBP, the big story has been Northern Ireland. You know, all this spat over cold meat imports into Northern Ireland, because Northern Ireland is being treated as part of the EU. You know, there are all sorts of restrictions and regulations. And of course, there's been a lot said about the negotiations, or the lack of negotiations, between the UK and Europe on that topic. And this move, the move that we saw, the most recent move, that all sort of kicked off when it seemed that the problem was not being solved completely but it was likely to be. Right, Prince, let me just, yeah, that question needs to be addressed. Yeah, what is the difference then between what I'm showing now and Elliott wave theory? Right, well, I am an Elliottian. I do follow Elliott waves. The ABC is just a little subsection, if you like, of Elliott waves. Now, ABC moves have been around since time began, where you get a move up, you get a correction, and then you buy it or sell it, as the case may be. They've been around since time began. Elliott wave, not quite so much, not quite so much. And no, I haven't actually covered that. It's okay. No, I'm glad you asked that question. So Elliott wave is a phenomenon which does show that many moves in the market follow a major 5-wave pattern. And as with all techniques and methods and patterns and so on, it's not always cut and dried. But generally speaking, the ABC is the easier one to spot. And we've seen many more of them, many more of them. Anyway, some last month, some weeks ago, we got this move, by the way. We looked at this little move and it looked very much as if we were going to get a breakout of this box. It was a classic double bottom, and its byline was up there at the top of the box. We were waiting for this move to happen. Anyway, it happened. It's a fantastic move, Notice the Hallmey, and well, we got in on it on the break of the Hallmey. So this move then developed into an A to B move and a B to C move. And the assumption was that it would go charging on up. And it did. It did. Notice from that hammer candle, that low hammer candle, let's just make it a little more prominent there. The very next candle was the buy candle because it was a major up candle after little ABC move down, and it went on up. Now, this move didn't last all that long. It did go up, but then it came to an end with that thumping engulfing. And again, money management, absolutely vital to keep an eye on what is going on. As soon as the momentum starts to tail off, we're going to take partial profits. Tend to take that 2/3 partial profit, stop to break even, tuck some money away, and then we get this engulfing. So that engulfing was telling us that maybe a continued up move was not going to continue. What do we get? What followed on was a very clear A move coming down, A to B move coming down, and a B move. And we thought, oh, what's going to happen next? It might just carry on up to the heavens and beyond. But there again, it might not. And the might not proved to be the case. So as soon as it dropped down below the low of that up day, it became a sell on the basis that I want to be trading these ABC moves, ABCD moves. And down it went. We had to do it intraday, and there we are. Now, if we take another look at this and see what has actually gone on here, I'm going to get rid of one or two of these lines because they'll just get in the way. Just get rid of those. This up move seemed to coincide, well, it did coincide with an interest rate movement in the States. They started to tighten a wee bit, and that's what triggered this move. Suddenly the market thought, oh, US interest rates are going up. Buy the US dollar against the Swiss franc, which is the classic one to trade. And that seems to have all fizzled out. But what I'm now looking at is the prospect that this just might be turning into a larger pattern. And if we go to the weekly chart, what we might be seeing is this. That now could be the A to B move. This could be the B move. And what might happen, and price action has got to break below the low of last week for this little scenario to play out. There could be a mother and a father of a down move. But what has to happen is that last week's low must be taken out in order for that one to work out. So it's on the watch list, looking longer term on it. Shorter term, we need to see that low taken out. And if we do, I will have a longer term short sell on the position. So I'm looking for these all the time, and where I spot them, I don't get them all by any means, but where I spot them, I share them with my Traders Class members, and they from time to time let me know things that they're looking at, and to some extent we share some of these that we see. We were looking for the New Zealand dollar to produce a nice little ABC. Well, it did, but we don't know yet if it's come to an end. And what we're looking for now is either a move on down to complete its ABC move down to that red line, or it might decide that it's going to go winging its way on back up. The jury's out. It's been settling back somewhat, and we wouldn't be at all surprised now, based on this price action, to see it move on back up. So we've actually got a stop loss just under, just above the high of last week. So a good many of these present themselves. We've got the euro here. Again, this one might have become a move. That was a nice little ABC move. It then decided to cave in. And again, looking on the bigger picture, that is an ABC in itself. And from here, we're not too sure, because if that dollar decides it's going to collapse, what's going to happen to the euro? It's going to go charging up. It's going to go charging up. So that's what I look for. I look for them predominantly on the larger time frames, daily, weekly, and I will also use from time to time the 4-hour charts. Now, I just want to illustrate this one. It's a 4-hour chart of this euro that we've been looking at, and in general, what we've seen a move down. We've got a sort of a channel here. There we are. Got a very straightforward channel. Channel lines can be incredibly useful. They just help to train the eye, and this is the sort of thing that on the 4-hour chart I look for. Look at that. It kisses the lower line, or at least if we were to have extended it from that previous low. And we then get this move. Well, an A move, a B move, a C move. Now, we could take that up to here, but what I'm really interested in is the bigger trend. And the bigger trend gives us a move down. Now we've got this A move, B move, C move. It's a zigzag zig against a big dominant trend. And once it starts to come away from, in this case, this upper line, you can do a similar sort of thing with Bollinger Bands. It gave us the opportunity to think about putting a short on. And sure enough, we got a breakout move, we got a pull back, and that shooting star was the trigger, and on down it went. And we tend to get these time and time again. So, folks, that's what I do. I send out a video a couple of times a week to my members. £97 quarterly, by the way, but there is a bit of a deal on at the moment. If you were to go to the link that Simon has put on there, there's a deal for you. The foundation of what we're looking at here is the 20-minute extreme swing trader. There is a deal on it. I know a number of people in this room have actually got it already, but if you were to get hold of that, it gives the core of what we do with these indicators. It gives you these indicators as well, and it's at a knockout summer price. The knockout summer price is that it's usually it started out as being £379, but you can get it today for £179.50. Plus, you will get a full month of Traders Class videos, which are normally £97 quarterly. So that is a knockout deal, folks. And I'd be only too pleased for you to come on board. And let's see if I can point you in the direction of some reasonable trades to take. But more importantly, build up your knowledge, and of course, part of the 20-minute extreme swing trader is the money management approach that we use. So there we are, folks. Great questions, by the way. Great questions, and great to see you in the room. Well, Martzina. And a good many others. Pat,
fantastic.
Great to see you as well.
Thank you very much. Thank you so much. We went rather smoothly through that one, which was great. We've had a few hiccups today, so it was great to end on a high with that
good,
nice calm approach, methodical approach to taking some money out of the markets. And I hope one or two of you go on and have a look at George's offer. And I know for many years we've been passing some people through, and they stick with you, George. So that's probably the best testament that there
Absolutely.
is.
Indeed.
Well, thank you so much. We'll let you go. I appreciate you taking the time to join us in the middle of the summer. I'll keep in touch, and wish you well in the high seas if you get out in the boat in this fine weather.
Yeah, I've got a little trip next week, just along the Sussex coast.
That's fabulous. I will take care, and we will catch up again throughout August.
Indeed,
okay, everybody. My apologies to everybody here for a few hiccups that we've had throughout today. Thanks for sticking with us. We will edit down the replay, so if you go to YouTube, we'll edit down hopefully all of these bits where we're trying to get sound working and screen sharing and so forth. But it's been good. I think we've had a few speakers, and I hope you've managed to get a lot out of it. Until next time.
Are you doing? I can't see you. I can't see you. Oh, you're dark. It's easy to do that.